Hey everybody, it's me, Gregory Mannarino. How are you today? It is Thursday, September 28th, 2017. Before you even get started, let me just say wow and thank you to all of you that have written to me about the loss of my dog, Bud Fox. I miss that guy a lot. They're so important to us. It's hard to put into words. Anyway, I tried to draw you guys little pictures and say thank you here. And I mean that with all my heart. I'm still a wreck about it. I know I look awful. Anyway, I'm doing okay thanks to all of you. And I mean that. I appreciate every single one of you so much. And that's why I'm here. And I want to talk about a few things that are going on right now with regard to this market now. It's the bond market, people, once again. Getting right back to work here. The bond market is making some huge moves here. Yesterday, I spoke about how there was a sell-off in the bond market. Well, that's accelerating today. At the time I am doing this video blog, debt is selling off substantially. The U.S. 10-year yield is 2.335. We haven't been here, I believe, since 2008. I mean, just to put a perspective on this, about a month ago, the U.S. 10-year yield was 2.04, a tremendous move in the biggest market of them all. So what is this telling us? A few things here. And I wrote an article earlier on my Steam It blog, which I really hope you're following. I also post a lot of stuff there, and I write articles, keep you on top of what's going on here. But let's think about this. Cash right now is leaving the bond market. Now, if you know my work, I always tell you, cash does not go to money heaven. It just moves around. It looks for places to go, kind of like, maybe like a dog's spirit. You know what I'm saying? Maybe their spirit leaves the body and it goes to dog heaven, or it stays right here next to you. Anyway, it just looks for a place to go, pretty much. So that's what's happening here. Cash is now leaving the bond market, and it's going to simply seek alternatives. And we can capitalize on this if we could just think ahead just a little bit. Now, I talked about yesterday how I believe that stocks were going to go higher. It doesn't mean it's going to go higher today, although the Dow Jones Industrial Average, I think, is up right now about 30 points or so. Yesterday, the market did finish higher as well. So, a few things are going to happen here, and I want to outline that for you. Again, cash is going to simply look for places to go. And I believe part of that is going to go into risk on assets. For example, the stock market. So the stock market, despite the fact that it is in la-la land, which with regard to its price action, cash is going to continue to move into stocks. A couple of other things are going to happen. Now, I'm not saying it's going to happen tomorrow or the next day, but we need to keep our eye on this. In the video I did yesterday, I said gold and silver were on sale. That sale is continuing right now. But the dollar, the U.S. dollar, as we all know, and I've been covering this to the point of nauseum since December, has been in a downward trajectory. We've had a bounce here. And that's all this is. I believe sincerely that over the next several trading days, whatever it's going to be, the dollar is going to resume its downward trajectory. So this sale that we're seeing now with gold and silver is going to end relatively soon. The dollar falling in value along with the debt selling off, I want you to think about this, is stock market positive. Now, this cash, all of it, is not all going to go into the stocks, in my opinion. When the dollar gets weaker here, we're going to see some of that cash make its way into gold and silver. Probably other hard assets as well, crude oil, which has been on a tear. So we need to keep our eye on these things as well. So again, gold and silver are still on sale today. If you're looking to add to your stacks, now is the time to do it. In my opinion here, always do your own research. Don't listen to just me, okay? With regard to the stock market, I think it's going higher. So let's keep our eye on that as well. Again, none of this is going to happen in a linear fashion. It's going to be a random walk, however you want to look at it. So keep that in the back of your mind as well, and be patient with these kinds of things. Again, I wrote an article about Apple a couple of days ago, a week or so. I put on a nice gain there. Being patient and putting these things on your radar screen allows you to, you always got to think ahead. You got to, you can't be like a dog that lives in the moment. You got to think ahead as a human being here, and that's really what I'm trying to do, is put a whole perspective on what's going on. One more thing, just real quick, with regard to this bond market. Now, if you know my work, if you've been with me for a while, you've heard me say that there's going to be a point where bond market sells off rapidly, and we're going to see yields rise rapidly. I'm not saying that we're at that breaking point here now, but we need to pay attention to that. You remember Alan Greenspan, now backing up this guy sitting right here. It said that he believes that the debt is in a bubble, and he outlined the same scenario that I have been outlining for years. That is, we have the potential to have a hardcore sell-off here in the bond market. That is going to spike yields at one point. This is not going to be stock market positive. In fact, it's going to have the opposite effect. And that's when cash is going to really start to move into suppressed assets, gold, silver, stuff like that. So I just want you to keep all this in the back of your mind here as we move forward, and look for these opportunities. Bet against this debt, people. Become your own central bank. And if you have a furry friend too at home, start to think of it every day that you have with your companion there, no matter what it is, even if it's a bird and you love it, or a fish, that is your last day with that. Because, that's what happened to me. And if I could go back one day, I wish I could. All right, with that said, before I get all misty on you, I'm going to let you go. I'll see you tomorrow.